There are many people out there who simply back off from the idea of investing in stocks when they listen to some complex terminology coming out of the mouths of those stock market pundits on TV. But what if we tell you that it's not as complex as you imagine it to be? If you're thinking about starting your journey as an investor in the stock market, then start here by learning some basic terminology that those high-profile analysts don't want you to learn. You don't need to go through that hard and old way if the new and updated way of learning about the stock market is right here, right now. Welcome to 5-Star Finance, the place where we teach you how to achieve financial freedom. There are probably thousands of words out there related to the stock market, but what we're going to be covering in this video are the most common words used in the stock market. One thing is for sure, if you're in the money game and you're wondering about your investing strategy in the stock market, then start here because we are going to break down money in a language that you can understand. So starting with the order of precedence, first up we have the term asset allocation. Now, this might be the most important term for everyone to understand because it is the balance between your stocks and bonds, or to put it more simply, it balances your investments. Now, for example, how much you want to invest in different assets, stocks and bonds and cash, will be determined by your asset allocation. Now, your asset allocation depends on your age. It all depends on what investing strategy you're following and what long-term plan you have in your mind. That brings us to the second important term, which is bonds. Now, bonds are money that you lend to a company or the government. Typically, bonds are issued by governments or corporations as they want to borrow money. So when you buy a bond, someone is buying it from you, and in return, you will receive the face payment on a specific date and periodic payments, typically twice a year in the form of interest, by the borrower. The next term is the bear and bull market, which represents whether the market is up or down. The market is termed a bull market when it is going up, and it is referred to as a bear market when it is going down. The next term we have on our list is the capital gain. Now, in stock market language, capital gains refers to the amount of profit you've made over a year by selling your stocks. That brings us to the eighth wonder of the world. You guessed it right, that is the compound interest. This might be the favorite term for you once you get familiar with it, because it is simply your money making money, and the money you made is simply making more money for you. In other words, when you invest, the sum you invest simply adds up over time due to the interest on interest. He who understands it earns it, and he who doesn't simply pay it. Next up, we have dividends. When we invest in a company, we're buying into that company by holding a small piece of it. As a result, when the company earns more profit, they simply give some part of that profit away to their investors so that everyone gets a bite of the cherry, which is known as the dividend. That brings us to Dow Jones. Now, these are the 30 blue chip companies in the stock market that have a big impact on the market. So the next time you hear a financial commentator say anything about the market performance, understand that he was referring to those blue chip companies. That brings us to equities. Equities are simply ownerships of stocks, and they're also known as stocks. The next time you get confused when someone talks about stocks, it should be understood that he or she is referring to the shares or stocks in a company. Followed by equities, we have ETFs, which means exchange traded funds. They're usually tracking a specific index, and when you buy into an ETF, that means you've got a bundle of assets that you can use to your advantage. Moving on, we have fiduciary, which acts in your best interest. And in stock market language, any organization or person that acts on your behalf with the best intention will be termed as fiduciary. Now that takes us to fixed income, which simply means a security that pays a specific interest rate to you. For example, when you buy bonds, you're gaining specific interest rates for you, which means fixed income. Next up, we have growth stocks, which are rapidly growing stocks. So when your investing strategy revolves around the long-term growth of your shares instead of short-term dividends, you invest in these growth stocks. Then we move on to hedge funds, which are typically a pool of investments that are used by wealthy investors to beat the market. Then we've got the index, which is just the indicator of the market. For example, the Dow Jones, which is typically among the best 30 companies in the stock market, is an index, but the best known index is the S&P 500. which is an index of the best 500 companies in the US. So an index is an indicator of the market. The next term is the IPO, which means the initial public offering made by private companies selling their shares on the stock market. Similarly, we have an IRA, which stands for Individual Retirement Account, which is also a tax-favored account. Then we have the junk bonds, which are high-yielding securities that come with great risk. So when someone talks about junk bonds, it is understood that the person is referring to securities with low prices with high earning opportunities. Then we have the KPI, which stands for the Key Performance Indicator, or long-term growth trajectory of a company. Then we have a long-term strategy, which means the buy and hold strategy is simple. When someone follows the long-term strategy, that means the person is buying the stocks and is counting on the stock to grow over time to earn some serious profits. Then we've got mutual funds, which means money pooled by many people, and that money gets invested in multiple stocks or bonds or even both. Mutual funds offer instant diversification as they're offering your money to be invested in various securities. Next up, we have NASDAQ, which is a computerized stock exchange, and this is very, very heavily tech-centric. So basically, you've got Apple, Google, Microsoft, and so on. You've got all those top-rated companies on NASDAQ. Moving on, we've got the NYSE, which means the New York Stock Exchange, which is also the largest stock exchange in the world. You need to start some serious paper reading if you don't know about the New York Stock Exchange. Then we have option, which is the contractual agreement between two parties to buy or sell a stock, which is also termed as a call or a put. That brings us to the portfolio, which is simply the collection of all the stocks you've bought over time. So if someone says, "How's your portfolio looking?" simply tell them about the stocks you have under your belt. Then we have the prospectus, which is very important, but very few people prefer to read a company's prospectus. It contains all the financial history of a company. So going through the prospectus should be your top priority before you start buying. Warren Buffett usually recommends always reading a company's prospectus before making a move. Then you've got the quarterly earnings, which simply refers to the earnings you've made in a quarter of a year. This brings us to risk and return, which is the center of investing, because if you don't know about risk and return, you should probably find another passion for yourself. Risk means losing the money you invested in principal, and returns simply means the number of profits you're making from those investments. That brings us to the S&P 500, which is a list of 500 top-notch companies in the stock market. Many investors use this index as a benchmark for their business, as it holds the major chunk of stock market proceedings. These were some of the most important terms for you to understand before you even think of buying stock in the market. Understanding stocks is the first part of your journey in stock market investing. Your success depends on how well you understand these stocks. For that purpose, we've provided a free ebook in the descriptions below, which explains 6 of the most important stock categories. Check out the video we handpicked for you, and we'll see you in the next one.